Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. This morning, GDP for quarter one for the U.S. blew out expectations. 3.2%. They're looking for 2.0%. This defied all odds. Now, we're seeing the equity market battle back from session lows. We have had a narrative. Stronger than expected data is going to lift the market in sentiment, whereas negative data or misses are going to bring the market lower or sentiment lower. Now, the reason why is because the Fed is not expected to hike this year. They're expected to leave rates unchanged or cut, and we need to see a slew of good data in order to even start invigorating any type of odds that would say they're going to hike this year. So as long as the Fed remains accommodative and the economy is starting to pick up a bit, then the stock market's going to try and push higher. And that's exactly what we're seeing here today as the S&P is recovering. Now, you do have a potential bull flag pattern on the S&P if it does get out above those highs, 29.35 to 29.39 resistance. You still have the all-time high in the futures contract, 29.47. But there is a very strong bullish flag pattern potentially falling into place right here that could bring a tailwind and take this thing to 30.25. So keep an eye out on that. NASDAQ battling back again from session lows. It held support at the previous highs. So things are starting to move, and the Russell 2000, which has been lagging, has sort of been the leader today. So watch all of that. What hasn't led is crude oil. It's actually held back the energy sector of the stock market. Crude oil, after President Trump said he's reaching out to OPEC in order to start to bring down gas prices. So you start to see, again, everybody's worried about the next Trump tweet or Trump comment after the Iranian oil waivers were removed. So we got it. Crude oil below support at $63. It hit near about 62. Dead cat bounce and starting to fail right now again at $63. The chart is now broken. Now there still is, as we've said, seasonally bullish reasons to like the market. We didn't start getting bullish recently, and we haven't been outright bullish. We've been more neutral but upbeat, and the reason being is we had major three-star resistance at 66.20 to 66.60. The high in the week, 66.60. So we're starting to see this thing come in a little bit. There are a lot of support levels, but again, the chart may be a little broken right now. Watch for a close below 63 to confirm that and encourage further selling into the early part of next week. But listen, it's been a heck of a run this year, and a consolidation is what you need in order to reinvigorate a move into Memorial Weekend. So we're watching all of that. Now, one of the biggest surprises on the board is gold and treasuries. Gold and treasuries are both ripping higher despite the stronger than expected GDP. It's almost like the dollar index priced in the better GDP, because 98 was the high of in the dollar all week. It stuck its head out above 98, and it's actually off that high after the better number. So you're starting to see a little bit of odd price action, but we're not going to question it. You got to just understand what the market knows what it wants to do, and we're seeing gold close out above 1285. We want to see that. It's out above there now, but 1285 is first resistance. Now, we do have major three-star resistance on the Morning Express. It's on there, right? So go check it out. We'll see where this thing can close out above that major three-star level and really neutralize this downtrend. For treasuries, we always like buying the dips in treasuries, and this rip back is very constructive. And then for the dollar, we don't get that breakout this week at 98, but it's still a very constructive chart pattern here towards the end of the week, or really all week long since ripping higher on Tuesday. So keep an eye on all of that, and we're here to help talk about anything on the board. Give us a call, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. You can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.